Hey everybody, what's up? It is Tuesday, April 21st. Stressful times. Stressful times. We got to stay hard to get through it. All right. We had a bounce back in oil today. The May contract went off the board. You know, that was yesterday the source of all the market volatility. May contract on the NYMEX closed at minus 37 and change a barrel. Today we closed, I think it was a positive $9. A big drop in the June contract, that was expected. Everybody now is in on this game. Everybody's in on the game. They understand the role. They understand that this USO, this large oil ETF, they're positioned long in the front month futures, and so they're looking to play that role. All right, and so we saw that big drop in the June contract, which is now the front month. So everybody's in on the game, you know, and that doesn't take away the problem we have with actual storage, where there is a lack of storage. I mean, that doesn't take it away. We're going to need to see big production cuts. Tomorrow we get the EIA report. We'll have to see where production is. Right now, the talk is we're down about 1 million barrels a day. So that puts us somewhere around 12 million barrels a day. That's still high. We still have imports coming in. So that condition where there is not enough storage is still going to be weighing on the market until we see production come way down. There's some good news though. I mean, parts of the economy are starting to reopen. A number of states are starting to reopen. Restrictions are being loosened up. That's good. We need the economy to come back. The fiscal situation looks very promising. Right now we are up about 518 billion in total spending over where we were last year. Total spending is now 3.37 trillion. That's up 518 billion over same time last year. That is a huge increase in a very short period of time. Unemployment benefits are up 20 billion. They're at something like, I think about 34 or 35 billion. That's 20 billion over where we were last year. 20 billion over where we were last year. And this all ramped up very quickly. And there's still a lot more has to be done. They just passed a new stimulus bill today for almost 500 billion. So the fiscal is slowly starting to trickle in. I mean, in some aspects, it's coming in now pretty good with unemployment benefits. But a lot of those stimulus checks still have to go out. So I think what happened yesterday with oil, deeply negative. I think that's a one-time event. You saw it happen. We all saw a history in the making. It was a one-time event. We still have this very troubling condition of not enough storage, but production is going to come down. The economy is starting to reopen slowly but surely. So, I mean, we may, and don't forget, I didn't even mention this. I forgot to mention this. In May, which is what now, like 10 days away. In May, the OPEC production cuts will hit. That's 9.7 million barrels a day. We may end up close to 20 million barrels a day in production cuts. The economy is opening up. You're going to have those OPEC production cuts coming in May. And so the situation might rebalance very quickly. It might rebalance very quickly, and we might see, just as we saw like a historic rise in oil inventories, when we hit, you know, the downside of that, or the flip side of that, we might see a similar historic fall in inventories when all these cuts start to hit. So I'm cautiously optimistic. Stocks were down yesterday. They're down today. I still say we are in an uptrend and the bottom was hit, at least for now. As long as the fiscal continues to flow, as long as the economy now is starting to reopen slowly, granted, I understand that we need to get it back open, but you know, it's better than everything being shut. I think we're still in a positive trend for the stock market, and you have to be buying these pullbacks. Let me mention one other thing. Today, gold, and I sent this out to my subscribers earlier today, 1670 on gold. I said that was a support level. You have to add to gold positions or initiate gold positions at 1670. That was a great point. We got in there. Gold is now back above 1700. And the reason why I said that is that we have seen in the last few weeks commercial entities in gold, you know, commercials in the gold business as buyers down there around 1670. So if they see value there, we see value there. So that's the update for today. I sent out all the charts with the fiscal snapshot. Every day I go over that and let you know, my subscribers see that. So go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. You'll find the link right here in the description below. See everybody tomorrow. Bye-bye.